how do you justify sectors like industrials up 17% in the month of November, banks up 19%? Are these gains sustainable?
Good morning, Seema. Happy to be with you. The justification for those sectors being up is just being very future looking. You've got a lot of pent up demand from people being on lockdown and a lot of those industries not being able to generate revenue like they would in normal conditions. And as the news about vaccines looks so promising, 90+% effective rates, it is simply a reflection of looking forward and some of this rotation into value that a lot of us have been looking to happen for a long time.
Your thoughts on the Trump administration continuing to stay active here until he passes on over the reins to Biden and blacklisting 2 Chinese companies. Is that a concern for you as an investor who has holdings abroad in China?
It's a concern, but candidly, I don't know that there's a good reason for anybody to have expected the Trump administration not to continue to be active. There's an old sports analogy of you keep playing until the clock strikes 0-0. I would expect the Trump administration to be active until January 19th.
That seems to be the playbook Trump is using. Meantime, if all goes well, if all goes to plan, a vaccine will reach some Americans by the end of this month. How could that change the narrative going into 2021?
I think it changes the narrative because it gives hope. And during this Christmas season, this holiday season, hope is what we look towards. In many instances, and including in my own family, we've got situations where people are in nursing homes. And as I understand it, our frontline workers and people in nursing homes will be the first ones to be vaccinated. And that's hopeful. But in a time where people are unable to see their loved ones or have what I'd like to describe as skinny Thanksgiving holiday gatherings, it's a sign of hope and looking forward to the future.
In the meantime, we're watching these economic appointments expected to come in this week under Biden. You have Neera Tanden, Jared Bernstein, Secretary of Treasury, potentially Janet Yellen. What does that all stack up for investors? What are some of the key questions you want to get answered once those appointments are confirmed?
One of the ways I think it stacks up for investors is candidly a return to what most of us would consider normalcy. Markets like stability. And seeing names like Yellen and some of the others are the types of names that people can find comfort in, that some of the old playbook will return and reflect an easier path, if you will, for economic decisions and making investment decisions along with that. When you take a look at some of these picks, or at least what's floated as some of these picks, it's people that have great experience, both in DC and economics. And so it is something that I would describe as hopeful for the long term.
At the same time, should investors think twice about putting money into this market when we still don't have clarity on Biden's economic policy and his agenda?
Well, you always want to be careful under any circumstance. But when you take a look and say, hey, listen, how are we expecting things to shake out over the long term? If you're looking into the possibility of how markets might perform over the course of 2021, I'd say it's probably safe to go ahead and make some of those stock picks. But if you're concerned about what might happen in the next 2 to 3 months, you want to be really careful. I think the next few months will continue to be bumpy, but longer term, I think we're looking to be in pretty good shape.
You're looking at a company like Apple. Despite the big moves in November, it's actually underperformed the S&P and other technology peers. And I'm just curious if investors should be reading into that, or given the strong performance it's had in 2020, this is just sort of a weaker month for the stock.
That candidly, Seema, I think that's all it is. You might want to look at it as somewhat of a reversion to the mean. But a company like Apple and some of the others in the technology sector have done exceptionally well over the course of 2020. It can't be expected that they'll continue to do that. They've benefited from our stay-at-home economy, if you will. But I candidly would also say there has been a permanent shift in terms of how we use technology. Zoom is not going to go away. The acceleration in the price of the stock is one thing, but the way that we use these technologies and the ability for many of us to continue to work, have these team meetings, you've got grandmothers that have learned to use Zoom and be able to communicate communicate and see their grandchildren a lot more. I don't think that's going to go away.
The second wave of lockdowns in October and November, Lee, they haven't yielded the same economic impact that we saw back in March and April, but LA issuing new stay-at-home orders, demanding all restaurants to shut down. I mean, how concerned are you about this?
I'm not as concerned because the lockdowns aren't as broad. And the other thing is I don't think the lockdowns are going to be as long. We've learned some things. The shortage of PPE that we experienced back in the spring, we're not in that same space anymore. Some things along the lines of what we've learned about how to manage this disease when people are afflicted with it have greatly improved. And again, just the fact that it won't be as widespread. Early on, things were widespread because it was so unknown. But we know a lot more now than we did 8-9 months ago.
Shepard Smith here. Thanks for watching CNBC on YouTube.